Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, personal finance, and most recently, Bitcoin mining related. Now in today's video, we're going to be welcoming back Anthony Power, and we're specifically going to be covering the Bitcoin halving, which is coming up this April. Now in addition to that, we're going to explain how the Bitcoin mining companies make money, where the halving is going to impact in terms of their revenue, and 5 specific ways that these companies can prepare for halving, along with our standout candidate in each category. Now on top of all that, we've also got a really cool calculator that TeraWulf put together in terms of cost to mine, so we'll walk you through that as well, along with a few of Anthony's famous charts. Now before we get into all that, please take a second, hit the like button, you guys. It's a huge help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join, and leave a comment in the section below letting us know which of the miners in your opinion is best prepared for halving, and who knows, you may even win one of these sweet gift boxes or swag boxes that we've been sending out to subscribers. Now with that being said, let's get into today's video. Okay guys, so today's video, we've got Anthony Power back on the channel. Now we did a really interesting piece or podcast the other day about the discussion around HODL versus no HODL. That came to us in the form of a subscriber request, and today's video is going to be focused specifically on the Bitcoin halving event coming up this April. So we wanted to thank the viewers. Another great topic that was brought to our attention from the subscribers in the comment section. You guys, make sure you leave a comment. But in today's video, we're going to be talking about how Bitcoin miners actually make money, what the halving is going to do to that business model, and various different ways that they can actually prepare going into the halving and hopefully recover or thrive post halving. So Anthony, thanks so much for being here, and a ton to talk about in today's podcast.
Yeah, thanks for having me, Bryce.
You're most welcome. I really enjoy these, and this is going to be a good one, especially as we start talking about some of the calculations. TeraWulf has actually put together a cost to mine calculator, which we're going to take a quick look at towards the end of the presentation. If you're one of those people who really likes doing your own analysis, which of course, Anthony, you're one of those people, and we're happy to have you here to walk us through. Okay, so we wanted to start off with how Bitcoin companies actually make money. Now there's 2 ways really in terms of a pure play miner. There's the block reward itself, and then there's transaction fees, which we've talked about in prior videos, especially some enhanced transaction fees we saw in December. I'll get Anthony to talk about that section. But in terms of the block reward, you guys, this is where the halving is really going to be impactful for these companies. It started off originally at 50 Bitcoin per block, so every 10 minutes or so. That's now been reduced. This will be the 4th halving event. So 50 went to 25, went to 12.5, went to 6.25, and it's now about to go to 3.125 this April. So when people talk about the halving event and the fact that the revenue or the cost to mine is going to be impacted significantly for these companies, that's exactly what they're talking about, is that specific piece of the income profile. Now on top of that, Anthony, we've also got transaction fees. So I was hoping you could give us a little bit of clarity there, just so people understand, I guess, the difference between the block reward and the transaction portion of income.
Yeah, so the transaction fees are effectively payments that are made for transfers within the blockchain itself. Also, we've seen some of these inscriptions that have been put on the blockchain, and people have been paying for fees for those as well. So in 2023, we had 2 really good months. I think it was May and December where the fees were really a good proportion in terms of comparison to rewards. And in December itself, we were looking at 20%. I think Marathon actually quoted, I think it was 22% of their revenues were actually fees for the month of December. We're not seeing that in January. We're not seeing the same level of fees in January. But we do know that when we get these uptakes in certain things like the ordinals and other sort of things that the blockchain been used for, there is a pickup in the fees, and that's really welcomed by the miners, because as the global hash rate increases, it becomes more difficult to mine, and therefore there's less rewards available for everybody on the network itself. So these fees play a really important part, and depending, post the halving, when we, like you quite accurately say, we go down to 3.125 Bitcoin per block. will we start seeing an increase of fees there, in a way to make it more for the miners to make, at least make some profit from doing the great work they do, which is effectively they're checking and auditing the blockchain on a daily basis. So they're carrying out this function 24/7, round the clock.
Yeah, I appreciate you giving some light there on the transaction fees, Anthony, because a lot of times we hear people really concerned about the halving event, but it is important to remember that the transaction fee portion of their revenue won't be impacted specifically by halving. Now, if there's an increase in interest like the ordinals or a ton of attention on the Bitcoin market and there's a lot of transactions, we will see those fees continue to rise as we saw in December and some months in 2023. But I think that's important. The other thing you mentioned there, Anthony, network difficulty. So a bunch of people have asked about this in the comments as well. The best way to think of about this, you guys, is just the number of participants in the ecosystem. So if you compare the overall hash rate to say a poker tournament, the more entrants into that tournament, the more difficult it's going to be to win or to get that block reward. Now, when you talk about mining pools, this is essentially groups or coalitions that have teamed up saying, hey, we're going to work together and we're going to share the rewards. So Marathon, for example, they run their own pool. That's why they were able to get slightly higher than the 20% average, because they've got a little bit more control over their own destiny, right? So a very interesting, complex way to earn revenue. And there's a lot of dynamics that we throw around loosely on the channel, but we wanted to really explain them. So now that we understand how these companies make money, again, just from peer play, there's a lot of alternate revenue streams, which we're going to talk about. We understand when the halving's coming, what it looks like in terms of the block reward. Now I wanted to start talking about how companies can actually prepare and which companies you think are going to be able to maintain superiority throughout the halving here, Anthony. So walk us through, I know there's a few strategies. What are the ways companies, or what are things they can do right now to get ready for this event?
Immediately they can look at their current energy price. Energy is the biggest cost that a miner faces through the life of the Bitcoin mining. It's not infrastructure, it's not the Bitcoin miners themselves, it's the actual energy to mine the Bitcoin. If they can get the best deal in readiness for the halving, that will help keep their costs at a level which is more manageable. We know that once the halving occurs, the length of time to mine one block of halving will effectively, or one Bitcoin will effectively double for miners because there's less rewards out there. That's the first part. The second part is look at the fleet of machines that they're currently using, and if they've got any spare capacity, any capital available, to maybe consider upgrading that fleet to a more efficient fleet, because efficiency is a really important part of mining. And you look at some of the older miners, some of the S17s, the S19s, and the level of efficiency of them compared to the latest S21, T21s is quite staggering. And therefore it could be taking you literally half the amount of power to mine a Bitcoin using the current machines on the market. And we know the technological change will gather pace this year. So there's no doubt that the S21s, there'll be a one or two miners that come out maybe towards the end of the year that are even more efficient than these miners. And that's hard to believe, because we thought when we got to the S19 XP, they were going to be like so difficult to improve on. And then the S21 blew that out of the water. And we know that, we're just waiting, impatiently for the next new miner. So that's two things. The third thing these miners will need is they're going to need cash. They're going to need some cash just to get through that halving bit. Bills are going to be paid. Pay your staff, pay your energy. If you don't pay your energy, you'll get cut off. You don't pay your staff, they'll walk. So you've got to pay those bills out there. So have some cash runway, because your revenues that come in post the halving, the Bitcoin price doesn't change, are going to be a lot less than they were. Fourthly, it's really important, to have maybe some additional revenue streams that aren't correlated to the price of Bitcoin. And some of the other miners have been looking down the route of the high performance computing, the delivering of AI services. And, we know that Hudson Hive were thinking of this a long time ago when they finished their Ethereum mining. But we've seen some new players come to the market. We've seen Iris Energy come to the market and make a big order for chips from NVIDIA. And we've also seen the recent order from Bit Digital. And we seem to mention this one quite often, but, it's worth mentioning because in terms of Bit Digital, they're the one that's got the customer. So they have a customer in place. They have facilities in place that they're leasing. They've purchased the chips. and they've got a business that is delivering 50 million of annualized revenue for 3 years. Now, that's really important during the halving because that gives them some revenues to offset some of the costs that they'll have if the Bitcoin price doesn't rise. So it's really important. The last thing to touch on is actual, if you go back, 18 months, 2 years ago, miners weren't really thinking about hedging techniques to cover any downside in the Bitcoin price, any increases in the global hash rate. So there are now facilities where miners can actually use certain hedging techniques for energy, for Bitcoin price, available to them. And you might want to maybe share an example, Bryce, of what in real life, how that can happen.
Well, and what we're seeing, Anthony, I'm from Alberta here in Canada, so a big oil and gas producer, and this has been common practice in the energy market for years and years, right? Is hedging your production prices, barrels of oil prices and all the rest. We're just starting to now see this emerge in the Bitcoin mining space, and you're right, in the form of hedging Bitcoin. Now we have the ETF derivatives. You can hedge energy prices, multi-year contracts. There's a lot of levers, I guess, now available, and more so almost by the day as Bitcoin becomes more mainstream, that these companies can now deploy to really help protect their downside. And Anthony, I'm glad you laid these out, these 5 kind of key things to keep in mind, because a lot of people have been saying, okay, well, which companies are going to be protected post-halving? So I thought what might be kind of nice here is we can talk about each one of these points, give a couple examples of what we've seen in terms of recent developments, a couple names. You guys, I'll caution you, when we go through any kind of discussion like this is individual metrics, so keep that in mind. There's multiple different factors that are going to impact the company's overall performance. But in terms of preparing for the halving event, I think this might be a fun one to run through, Anthony. So first off, you said energy prices. Now, as soon as you said that, I thought about Bitfarms. We saw a big PR come out this year talking about low-cost energy in South America. What are some of the other standouts in this category in terms of low-cost input or low-cost energy?
Yeah, you've got to look at TeraWulf. TeraWulf have nuclear power, and unfortunately that's only part of their mining energy. But for that particular deal at the moment, it's a 5-year deal, fixed deal at 2 cents kilowatt hour. So that's really low. I don't see many miners getting anywhere close to 2 cents kilowatt hour, not in North America. Then you look at Cipher Mining, who have got a cost of about 2.7 kilowatt hour. TeraWulf's blended hash rate is about 3.5 cents kilowatt hour, so they have got sort of like a more of a market contract for the remaining hash rate. But even at 3.5 cents kilowatt hour, that's a really, really good fee. Then we get sort of like close to like the 4 cents kilowatt hour, and you have to sort of like, Riot platforms, put them into the conversation. So they have a fixed price agreement that runs for quite a number of years to go. But in 2023, as well as having that fixed price agreement, which effectively means they should be able to run their machines round the clock, they were using an energy strategy linked to the fixed price agreement there to benefit from curtailment. So when the local price of energy was high, they were able to switch off and actually, sell the power back for energy credits. And so that was a really good, and not they weren't the only man to do that. Iris Energy did that. Argo blockchain, Bitdeer also did that, and the Bitdeer facility is literally 500 yards away from the Riot facility at Whinstone, so they're actually neighbouring mining facilities. So they have, they have as like same sort of like agreements with the power provider. So we'll see more when the results come out from what they declare. But Riot were very open and transparent about what they received in credits. It was about 71.6 million for 2023. So yeah, so those are some of the miners with the low prices. We know that Marathon have a hosting fee with their energy price, and as do Bit Digital. So their prices are sort of like around about the 6.5 cent a kilowatt hour, but that includes the hosting fee. So I'm sure now with Marathon buying these 2 sites and being the size that they are, they'll probably be able to negotiate some pretty good deals going forward, because they'll have the power of the buyer in those conversations. They're not going in for a few kilowatts here, they'll be going in for significant amounts of megawatts of power, and so they'll hopefully be able to get some good deals. But it is about trying to get that deal as low as possible for the miners.
Yeah, the good old purchasing power never hurts. And I just wanted to call out, guys, Anthony specifically talked about Cipher. We've got a lot of comments saying we don't cover Cipher on the channel. So we got them. They're in the top couple miners for low cost energy inputs. Anthony, I think the second one you talked about was fleet efficiency. Is that correct?
Absolutely.
So why don't you walk, this is one, there's no shortage of news this year. We pretty much every other day, it feels like, see article about a new upgrade to the S21, the T21, the efficiency, the joules per terahash. So who are the standouts in this category?
Well, you got to look at the big players who had the capital, so we look at the likes of Riot Platforms, look at Marathon Digital, we look at CleanSpark, we look at Iris Energy, we look at Bitfarms. Those 5 miners put in significant orders for the latest models, the S21, T21s, and the micro BT equivalents. So, you've got CleanSpark, who are expected to get to 20 exahash before Q2 of 2024, so within the next 4 or 5 months, to double their current hash rate, which is sitting at about 10 exahash. They've also got firm orders to get to 32 exahash by the end of the year, and that hopefully is having facilities available to put those machines in, because that'll be the question. They've got the machines, or they've ordered the machines, where are they going to go? That's where the next questions that needs to be asked. In terms of Riot at the moment, I've got about 12.5 exahash at their Windstone facility, but we know they're developing Corsicana, which is going to be 1 gigawatt site. They've got firm orders in to get to 38 exahash, so they're going to literally treble their hash rate. But it's going to take them probably into the middle of 2025 to get that, so another 18 months to get to that total. But they are anticipating getting to sort of like 20 exahash early in 2024, when the phase 1 of Corsicana becomes live. So hopefully we'll get Jason on the podcast, and he can give us more of an update, because we're seeing pictures now of Corsicana and looking really good, and we want to see, the dates for those machines to go in there and get them back to where they were, probably about 18 months ago, as like, being one of the top performing miners. Marathon Digital haven't announced a big order yet, but they have announced an order to get to 30 exahash or 32 exahash. But we know that that's just a matter of time before that announcement comes through, because I think they've got a plan to get to 50 exahash. We just want to see the order for the miners to get there. They bought 2 sites, so they're looking now at infrastructure model. So, and they've got significant cash and Bitcoin collateral on their balance sheet and their treasury. So they've got, I think at the end of December, that was like a total of just shy of $1 billion. So they've got more than enough to get through. Riot would also the same. Riot had a significant amount of cash and Bitcoin. So those 2 companies, for me, stand out in terms of being able to deliver on their promises from actually be able to pay. CleanSpark will continue to use their ATM, which is an at-the-market offering, although some people might say it's like an ATM for drawing out cash every day, and effectively, there is a synergy with those two acronyms there. Iris Energy, people have said about Iris not having a hodl, and they've gone out there and more cautiously grown their hash rate, and they had a great increase in hash rate in 2023. And they've got, they're at 6 exahash at the moment, so that was achieved early in January. And I think by the middle of the year, they're going to be 10 or 11 exahash with an option to buy another 9 exahash. They will be using the ATM because, these machines aren't cheap, and they've got an ATM in place to do that. But they've been trying to use the Bitcoin, selling the Bitcoin as a way of paying towards some of that there. So not all the time going for diluting the shares, and a lot of shareholders will be pleased that they're using that more cautious approach. Bitfarms, they're at 6.5 exahash at the moment. They've got a plan to get to 17 exahash, and that actually 17 could become 21 if they repurpose some of the machines they've got. So they've got great strides. So all these mines we're talking about now, looking to get significantly above that 20 exahash target level, with the latest machines. And the latest machines mean not only will you be able to, they have the power, but the cost of the power is remarkably cheaper because of the efficiency of those machines. So in terms of an S21, you're using, effectively half the energy to mine a Bitcoin than you would with, say, an S19 Pro.
And I know you brought a visual there, Anthony, so I'll throw that up on the screen. But as you guys are listening to this, more purchase orders means more units in these facilities. As the unit count goes up, the overall exahash goes up, or the capacity goes up. But it's actually the inverse in efficiency. So we want to see the joules per terahash go down. So just keep that in mind, you guys, as they're adding these next generation miners. Overall hash rate goes up. However, that averages down their fleet joules per terahash to get into that, I guess sub 20 is kind of what people are looking for post halving, Anthony. Hey, is that the number you've been hearing?
That's absolutely. I mean, if we look at all the miners at the moment, Marathon Digital have the lowest efficiency, which is about 24.5. And, you know, with their, when they bring down new orders in, that'll go below 20. And we're also already seeing the likes of Bitfarms, Iris, hoping to get down to that 20 level, even sub 20 level with the amount of orders that are coming through there. Same with CleanSpark and Riot. Equally, you know, they've got good, those miners have got quite good, well, Bitfarms hasn't got great efficiency compared to the others. They're at 35 at the moment, but they're at 6 exahash, 6.5 exahash in production. But they're going to treble their, you know, effectively their hash rate. And if they bring in these new machines, that will get that 35 down to in the low 20s. So, you know, in terms of this little table I put together, it sort of highlights that, you know, as you said there, the lower the efficiency, the actual less energy you're required to mine a Bitcoin. So the S21s and T21s are more expensive than their predecessor machines, the S19 Pro, the S19 XP. And so, but actually, if you look at what these machines achieve on a daily basis, and I was using an energy cost of about 4 cents kilowatt hour, which is about an average for North America, having a pool fee of 1%, it might be 1 to 2% depending on which pool you're in, but using 1% across the board there. And you can see that the daily profit achieved by one of these machines, so the S19 Pro, achieving $5.18 a day. And then you've got the S21, which is achieving $11.68. Now, you know, that's straight away, that's like, you know, that's you know, more than twice the profit on a daily basis. What you've got to remember is to buy the S21, it costs you nearly 3 times the amount of an S19 Pro at today's prices. So I then thought, well, actually, if we say these machines last for 3 years, what's the sort of return we get after a 3-year basis? So on the S19 Pro, you know, you're having that for 3 years, take into account what you've paid for it, you're going to get a profit above the cost of that machine, and taking into account, you know, you've paid for the energy at the price quoted in the table, you're going to get a profit of just over $4,000, so $4,032. But if you'd have gone out and bought the S21 or the T21, that profit, taking into account the higher price machines that you're buying, actually is more than double what the S19 is. So when you see these new orders come out, they are coming out with significant S21, T21 and the equivalent micro BT machines, because they know over a longer period, the company brings in more revenues. And these are, you know, more efficient machines that are not like, you know, massively bigger than the S19. So actually you can probably put more of the, you know, put more hash power into the same space effectively and deliver a return that way. But yeah, it's an interesting view. And I know we get a lot of questions about this. So hopefully this table can sort of like highlight to people, you know, when we talk about hash rate and the efficiency, what that really means.
For sure. And in our in our last video this week, we talked about joules per terahash over 2023. So I'd encourage you guys to go back in there, take a look at that chart as well. Now, the next couple, Anthony, we talked about balance sheet strength, probably the most straightforward, I guess, of the variables here. We've talked about that in the past. Marathon with nearly $1 billion on their balance sheet is in a great position. I can touch on the hedging again a little bit before we end, but the fourth one, I guess, you listed is of particular interest to me. It's the alternate revenue streams, because this is really the only lever that these companies can pull that are completely separate from halving, right? All the equipment, the energy costs, the efficiency, that all still has to relate to halving. However, the alternate revenue streams, as you mentioned, Bit Digital really leading the way there with that $50 million annual contract in the HPC realm. This is something we're starting to see almost across the board, right? We had Soluna CEO on talking about all their various ancillary businesses. We've seen HPC, we've seen AI. Where do you think this is really going in terms of an industry, and how can we represent or compare apples to apples here, Anthony?
Yeah, I mean, it really helps some of those miners that, I don't see the likes of Marathon. I mean, Fred's came out and already spoke about his view on some of these alternative revenue streams, and Marathon are probably going to stay as a Bitcoin miner through and through, but they've got the balance sheet to do that. Some of these other miners that we're talking about don't have as big a cash position on their treasury, so they're looking to make sure that they if there's an opportunity to bring in revenues with good margins, and believe you me, it's worth probably spending 10 minutes to review the podcast that you did with Aidan and Frank, who gave a really good update on high performance computing and the margins that were achievable, and the margins through those facilities compared to a Bitcoin mining facility is mind blowing. And you don't need as much energy for a HPC facility. So, really, really, really good margins. We know that, you just have to pick up a newspaper or look at your tablet every day, and there is a lack of data center power for a lot of things that we do on the internet and with AI and all that like that. So this looks like it's a growth. I read the other day, I think they need twice as much as what they got at the moment in terms of capacity. And so that means some of these miners are going into a space where it's still growing. It's not like we've not sort of like got to the end of this. And it's like, 30 years ago, and they said the internet will never catch on or whatever it was. And, it's like probably more part of our day than ever before. And so, who's to say AI is not going to be around for a long time? It sounds like, I use AI on a daily basis. We all do. We probably do it without realizing it. And so that needs to have power to do that. And so these miners who run great facilities, data centers, I mean, look at the data centers we saw from, Soluna's podcast the other day. I mean, it looks like something out of Star Trek, it was really, really smart facilities there. They know that, they've got, facilities that are quite close to being developed for HPC. Iris Energy's facilities also, they put out, good facilities as well. And the gap between, Bitcoin mining in their terms to HPC isn't as big as what it would be for some other miners. So we've seen some of these, tier two, even league 2, league 3 miners. So, not the Riots and the Marathons, not the CleanSparks, not the Core Scientifics, but some of the miners that are sort of in that group behind going into the HPC side. So Hive and Hut Digital, Iris Energy, Bit Digital, obviously, because of the fact they've got this big contract. And we'd be interested to see other miners coming out and giving their contract details soon, because, they're having discussions. This is not going away. They're having discussions. We just need to see it in their updates. And there's a lot of financial updates coming out in February and March from companies. So we'll get probably more information through those updates when the companies themselves give a view of what's happening going forward. So that'll be interesting. But yeah, it's a great way of having an uncorrelated revenue stream coming through that will help you when there's some downside. And the other flip side is, if the Bitcoin price rises sooner than we all think it might rise, then for some of these companies that have gone into this, it's a win-win-win. It's, they're going to win on both sides. And if it doesn't rise, it's still a win for them because they're getting these good revenues from another service coming through to help them.
That's exactly what I was going to say, Anthony, and that's the $1 million question, or the catch-22 here, right, is Bitcoin price. Because, as you say, essentially this is another form of spreading out risk or reducing downside risk for the organization, right, which is essentially the same as hedging. But the problem here is, for these pure play miners, if they're right and the price of Bitcoin takes off, it's going to be companies like Marathon that are 100% Bitcoin mining focused that just are off to the races. We'll see those margins absolutely blow up, or expand. But if the price does not go up as quick as possible, and we'll see those margins absolutely balloon. However, if the price doesn't go up as expected, these are the companies that have the balance sheet strength to weather that storm and hopefully ride it out for the price of Bitcoin to go up. Whereas some of the smaller, like you say, more diversified players, Anthony, they don't have as much risk, but they also won't be able to capitalize on the self-mining if Bitcoin goes up as quick. So realistically, time will tell which is the better strategy here. It just depends on your risk tolerance and your preference and forecast for Bitcoin. Which is a great segue to the hedging, which we talked about as another lever to reduce downside risk and spread out some of these uncertain variables that are also common in the Bitcoin world. Now, with all that being said, now that we've talked about a lot of these variables, if we jump over to the TeraWulf website, we navigate into the cost to mine calculator. We're not going to go through this for you guys, but you can see all the various different mining inputs, the company inputs, the cost inputs, a lot of which we've discussed in today's program. You can start plugging those in and looking at some, different scenarios, break-even points, revenue profiles, based on different Bitcoin predictions. So I would encourage you guys to go in, take a look there. Let us know any feedback. We'll pass that on to the TeraWulf group. Anthony, really appreciate today's discussion, more of an educational one, although we did throw some top picks or category winners in there, I guess, as well. I'll kick it back to you for any closing thoughts, but this was very helpful in terms of halving and how to wrap your mind around this.
Yeah, and we're as of today, we're 11 weeks and 2 days away from the halving, so not a great deal of time to go. So not a great deal of time for some of the miners that haven't put out their updates as to what they're going to, purchase in terms of growing their hash rate with more efficient miners. But there's still time. The prices are still low for Bitcoin miners at the moment than they were in 2021. So. But it's just having that capital. You mentioned on previous podcasts, there's not a great number of levers for these miners to use when they're navigating the financial markets. I mean, you've got, dilution, which many of the miners are doing. And, dilution was a bad word in 2021 and, shareholders didn't appreciate it. But I think, some shareholders have come around to the fact that the only way to grow for these miners is by dilution. We don't see many miners going down the loan route and having debt on the balance sheet. That's proved to be a bad way for miners to grow. From previously, we saw Course Scientific only come out of Chapter 11 this month. We saw other miners that were close to Chapter 11 and having difficulties. So debt in the form of loans has not been the way forward for most of the miners in 2023. And then the other alternative we've got is to sell Bitcoin, and we know that all the miners have been selling Bitcoin. So in 2021 we had a couple of miners that wouldn't sell, but in 2022, 2023, during this downturn, we've seen all the miners start changing their strategy to sell a greater proportion of their production. And some are still hodling. We've got about 5 or 6 miners that are still hodling, but there's as many miners that are selling on a daily basis now, and that's you go back to 2021, 2022, I think it was only CleanSpark and RS Energies that were literally selling on a daily basis. And people were saying that's not the way to go. But actually, when they were selling in the sort of like 60s and 50,000s, when everyone was hodling, in the anticipation of it going to 6 figures, they were getting the benefits from selling at that point in time. So they've had some some winning positions coming down because they've been able to get a good average from their Bitcoin price. But yeah, I mean, you rightly say, if Bitcoin goes to 100,000 and the energy price stays as it is, then the likes of Marathon and the likes of Riot and the likes of Hut, those three stand out as their balance sheets will grow significantly because they've got significant hodls. There are some of the miners with smaller hodls, but when you've got 15,000 Bitcoin or 9,000 Bitcoin or 7,000 Bitcoin, that's a significant amount on the balance sheet at today's prices. So yeah, interesting times, but a good conversation today, Bryce. Thank you.
Most definitely. Yeah, and as Sam Tabar says from Bit Digital, you can't run a business on hope, and it's definitely not for the faint of heart, as we've learned. So there you have it, you guys. We've talked about how these companies earn money, how the halving is going to impact that business profile, and 5 methods or techniques they can use to help set themselves up for success going into this halving event. Curious to hear your thoughts in the comment section below. If you're still watching, hopefully you found some value. Hit the like button, you guys. It's a huge help to Anthony and myself to get this content to other people who may find value. If you're not subscribed to the channel, McNallie Money, feel free to join. Anthony's also got his Patreon up and running. We give a lot of additional information in that group that maybe we don't share on the regular YouTube channel. And with that being said, Anthony, thanks again. We'll see you in the next video.
Thanks, Bryce.